Good afternoon, everyone. Jason here. Today is July 7th, and this is your aftermarket update. So to say that we had a good day here at the Oil Trading Group would be a bit of an understatement. In fact, we had a tremendous day. We did take two trades today. My first trade was a small losing trade. The second trade was a $1,600 two-lot winning CL trade. We'll talk about that one here in just a few moments. But again, the one thing that I want to talk to you about, we always talk about this in here, and it's one thing that I just want to continue to reiterate. It's something that we do in here and talk about as just quite consistently, and that is the fact that the only real true holy grail in trading is to be able to figure out how to cut your losers short and let your winners run, and that's one of the things that we did here today. The second piece of that is risk reward, right? We want to be able to have small stops and big targets, because with small stops and big targets, you can be wrong a whole lot and still end up being right at the end. And that's what it's all about, right? Is being consistently right in your trading. So today, this red line represents our favorite retracement setup. It is that setup that we offer in the extended trial package. And that is represented here. That entry is represented right here by this red dotted line. In addition to that, we had our structure market maker levels also provide some confirmation. So as in the overnight session, you can see here that the market sold off. We had a little bit of a retracement. This is a part of a bigger picture sell-off that had gone on for the week. One of the things that we talk about in here quite consistently is that the highs and lows for the week get made on Mondays and Tuesdays, and this is your Monday high. So as the market was coming back and rotating around and rallying, we were looking for a pullback to continue this push to the downside. This is your 15-minute chart, and you can see again that the high was made there on Monday on the CL. So as we were looking for another leg to the downside, we used our favorite retracement pattern there. We also had our daily structure mid show up here. My first trade here today was a short at 74, just a little bit below this, and my stop was 86. We got up to 88. So it took me out by 2 ticks before the market then began this process of selling off. So what we were looking for as a target here today, we talked about this daily structure signal. So again, we're in at 78 up here, daily structure mid, looking to get down to this daily structure signal at 44.18. And then ultimately, we were looking to try and push down to this 43.60. Now, we never quite made it to 43.60. One of the things that we did do, however, and one of the things that we talked about in here, when you add the secondary plots to it, you had your 43.83, which is the 200% range extension. That typically keeps, as we call it, the ball in the yard. And then you had the daily structure signal up here at 18. So if you take 44.18 and you subtract that 43.83 from it, and then you divide that by 2, add it back to the 43.83 200% extension, that gave you a kind of a midway point between those two levels at right around 44. I figured what we would do is actually break 44. You're going to see my stop here is an even 60 ticks. An even 80 ticks rather, down to 98. Now, the reason I call this a 160 tick trade is because we carried that with 2 lots. So my target was 43.98. We were looking for a bit deeper target down there at 43.60. But we knew that 200% range extension was down there as well. And again, that is that typically keeps price action in check, and that's kind of where it ended up today, is down around that 200% range extension, which was down there at 83. The market continues to drop. You get your revision signals. I'm going to turn the revision signals off so that we don't confuse this chart. You come right down into that daily structure signal. You go a little bit deeper, and my target, as you will see, is 98. The low on the day happens to be 43.78, right? So we rode the short here from 78. We took our target at 98. That was an even 80 ticks per contract, or 160 ticks total, and that was trade number 2. Our initial stop on this was, I think it was 11 ticks, and we got to an 80 tick target, so that's better than 7-to-1 risk-reward ratio on that particular trade. We did take a small losing trade that just kind of swept us out before the market rolled out. We did re-enter short. So this trade that I'm going to show you on the trade of the day is our second trade, and it was a 160 tick trade of the day. So I'm going to let you watch the trade of the day here. So what I've done is, it was about an hour and 15 minutes long. I cut the trade down into pieces, sped it up, so make it about 3 minutes, put a little music behind it, and hopefully you could get the gist of what it is that we were doing with this OTG trade of the day. So again, without further ado, here is the OTG trade of the day, and I'm in at 78. My stop will be 89, and then we'll take a seat here. All right, so like I said at the beginning of this video today, super cool trade, right? All the way down to our target. You saw me maneuvering that target a little bit as we went down through it. Took it from the original 18 and then down to 98. And we hit it. $1,600 trade, 160 ticks, really cool trade of the day. So again, as always, I want to say thank you for spending time watching the videos here at the Oil Trading Group. And until next time, I want to wish you good luck and good trading.